Our journey into the financial landscape of one of the wealthiest people in the world, Warren Buffett, begins now. Born into modest beginnings in Omaha, Nebraska, Buffett is a testament to the power of sharp intellect and a disciplined investment strategy. Known as the Oracle of Omaha, his financial acumen has carved him a place among the world's most successful investors. From delivering newspapers to becoming the CEO of Berkshire Hathaway, Buffett's journey is one of steadfast patience and calculated risk. His investment philosophy, deeply rooted in the value investing principles of his mentor, Benjamin Graham, has been the cornerstone of his monumental success. His story is not just about wealth accumulation, but also about integrity, perseverance, and a deep understanding of the financial markets. Let's begin our journey into the life of this financial titan. His life, his philosophy, and his success all serve as a beacon for those who aspire to chart their own course in the vast ocean of investing and finance. Warren Buffett's journey to financial success started at a young age. Born in Omaha, Nebraska in 1930, Buffett demonstrated an early penchant for numbers and a keen interest in business. In fact, his fascination with the world of finance was so profound that he made his first investment at the tender age of 11. Yes, you heard it right, 11. He bought 3 shares of City Service Preferred for $38 each, a decision that sparked his lifelong passion for investing. But Buffett didn't stop there. His teenage years were filled with entrepreneurial ventures that showcased his business acumen. From delivering newspapers to selling used golf balls and stamps, Buffett was always on the lookout for ways to earn money. He also invested in a pinball machine business, which he later sold for a tidy profit. Perhaps one of the most telling anecdotes from Buffett's early years was his high school yearbook prediction. His peers predicted that he would become a future stockbroker, a prophecy that came true in more ways than one. This wasn't a random prediction, though. Buffett had been keeping track of stock prices on a chalkboard in his office since he was a teenager. Buffett's early experiences weren't just about making money, though. They were about understanding the value of money and learning how to grow it. He learned the importance of investing wisely, of taking calculated risks, and of being patient. He discovered that financial success wasn't about quick wins, but about long-term strategies. These early experiences laid the groundwork for Buffett's future financial success. They shaped his investment philosophy and steered him on a path towards becoming one of the wealthiest individuals in the world. And they serve as a reminder that financial success often starts with a simple interest, a willingness to learn, and a dash of entrepreneurial spirit. So, as we delve further into the life and lessons of Warren Buffett, remember, every financial journey starts somewhere. Buffett's formal education in finance significantly shaped his investment philosophy. It was at the University of Nebraska where he first started to carve out his understanding of economic theory. Yet it was his time at Columbia Business School that truly marked a turning point in his journey towards becoming the Oracle of Omaha. At Columbia, Buffett stumbled upon a book that would change his life forever, The Intelligent Investor by Benjamin Graham. This book introduced Buffett to the concept of value investing, a philosophy that emphasizes buying stocks at less than their intrinsic value. Intrigued, he decided to enroll in Columbia, where Graham taught. There, under the guidance of Graham, Buffett honed his skills in identifying undervalued companies. He learned to focus not on market trends or economic forecasts, but on the fundamental value of a company. Graham's principles of investing for the long term and focusing on the company's intrinsic value rather than short-term market fluctuations resonated deeply with Buffett. Graham, often referred to as the father of value investing, became a mentor to Buffett. He imparted wisdom that transcended beyond mere investment strategies. One such principle was the concept of Mr. Market, a hypothetical investor who is driven by panic, euphoria, and apathy, and is therefore prone to making irrational decisions. Graham taught Buffett to exploit Mr. Market's mood swings rather than be influenced by them. Buffett also learned the principle of margin of safety from Graham. This principle suggests buying stocks at a significant discount to their intrinsic value, providing a safety net in case of errors in judgment or unforeseen events. These principles became the bedrock of Buffett's investment philosophy. They taught him to be patient, to be disciplined, and to remain unswayed by market hysteria. It was this education, under the tutelage of Benjamin Graham, that prepared Buffett for the world of high-stakes investing. Armed with the principles of value investing, Buffett was ready to take on Wall Street. Buffett's investment strategy is a masterclass in patience, research, and long-term thinking. It's not about quick returns or chasing the latest trends, but rather a deep-seated belief in the power of compounding and the value of time. Warren Buffett, often referred to as the Oracle of Omaha, looks for undervalued companies. He seeks out businesses that are priced less than their intrinsic value. This is not about finding a diamond in the rough. It's about identifying a diamond that others have overlooked. These are companies with strong fundamentals, solid earnings, and a competitive edge, but for some reason the market has undervalued them. Buffett's investment philosophy is founded on the teachings of his mentor, Benjamin Graham. He embraces the concept of value investing, which involves buying securities that appear underpriced by some form of fundamental analysis. He's not interested in the noise of the stock market. He's interested in the value of a business, but it doesn't stop there. Buffett isn't just looking to make a quick buck. He's in it for the long haul. This is where his concept of buy and hold comes into play. Once he invests in a company, he's not looking to sell it off at the first sign of profit. He holds on to his investments often for decades, reaping the benefits of compound interest over time. This strategy isn't flashy, it doesn't make headlines with overnight success stories, but it's a strategy that has stood the test of time, weathering market downturns and economic recessions. It's about patience, discipline, and a keen eye for value. Buffett once said, "Time is the friend of the wonderful company, the enemy of the mediocre." He understands that time can turn a good investment into a great one. And that's exactly what he's done time and time again. This strategy is the backbone of Buffett's financial success. It's not about being the smartest person in the room or having the most information. It's about being patient, being diligent, and most importantly, being disciplined. Because in the world of investing, slow and steady often wins the race. Buffett's acquisition of Berkshire Hathaway marked a turning point in his financial journey. Let's delve into this fascinating chapter of Buffett's story. Berkshire Hathaway, originally a struggling textile company, caught the eye of Warren Buffett in the mid-1960s. Rather than being drawn to the company's textile business, Buffett saw an opportunity to repurpose the company as a holding entity for his investments. In 1965, Buffett took control of Berkshire Hathaway and began its transformation. Over time, the textile operations were phased out and Buffett started using Berkshire Hathaway as a vehicle to buy other companies. Today, Berkshire Hathaway is a multinational conglomerate holding company consisting of numerous businesses across a wide range of industries. Now let's shift our focus to some of Buffett's most successful investments made through Berkshire Hathaway. The first one that springs to mind is Coca-Cola. Buffett's relationship with the soda giant dates back to the late 1980s when he purchased a significant stake in the company. His investment in Coca-Cola, worth approximately $1 billion at the time, has grown exponentially, reflecting Buffett's knack for long-term value investing. Another noteworthy investment is Apple Inc. Despite his well-known aversion to technology stocks, Buffett saw something special in Apple. Berkshire Hathaway first bought shares in the tech giant in 2016, and today it's one of their largest holdings. This investment has paid off handsomely, contributing significantly to Berkshire Hathaway's overall value. Buffett's other investments span a range of industries, from insurance and utilities to food service and retail. Each of these investments reflects Buffett's investment philosophy of buying shares in businesses that are understandable, have favorable long-term prospects, are operated by honest and competent people, and are available at a price that makes sense. Through his stewardship of Berkshire Hathaway, Buffett has not only built a financial empire but also created a blueprint for value investing. His hands-off management style, allowing the leaders of his portfolio companies to operate independently, has also set a precedent in the business world. Buffett's approach to investing, patient, disciplined, and focused on intrinsic value, has yielded remarkable results. So, what can we glean from the story of Berkshire Hathaway and its major investments? It's a testament to Buffett's foresight, his ability to identify value where others may not see it, and his unwavering commitment to his investment principles. Through Berkshire Hathaway, Buffett has built a financial empire. His success serves as a beacon for investors worldwide, illuminating the path to financial success through smart, patient, and principled investing. Buffett's financial journey offers valuable lessons for investors and financial enthusiasts. One of the most profound takeaways from his success is the significance of patience. Buffett didn't build his empire overnight. His wealth accumulated over decades of thoughtful investing, proving that there's no quick path to financial success. It's about steady growth and consistent returns, not the get-rich-quick schemes often sold as the ticket to wealth. Another crucial lesson is the importance of research. Buffett is a voracious reader and spends a significant amount of his time studying annual reports, financial statements, and market trends. He once said, "Risk comes from not knowing what you're doing." This highlights his belief in informed investing. He doesn't gamble on stocks, he invests in businesses he understands and believes in. But perhaps the most important lesson from Buffett's financial journey is the emphasis on long-term thinking. Often we're tempted to chase the latest hot stock or get swayed by market fluctuations. However, Buffett advises against such a short-sighted approach. He recommends investing in businesses with durable competitive advantages and holding on to those investments for the long haul. His investment in Coca-Cola, a company he's held shares in for over 3 decades, is a brilliant example of this strategy. Furthermore, Buffett's philosophy extends beyond investing. His wisdom around wealth, saving, and spending can be applied to our personal financial management. He is known for his frugality and emphasizes the importance of living within one's means. His humility, despite his immense wealth, is also notable. He once remarked, "It's nice to have a lot of money, but you don't want to keep it around forever. I prefer buying things, otherwise it's a little like saving sex for your old age." This reflects his belief in using wealth to improve one's life and the lives of others, rather than merely accumulating it. By following Buffett's example, anyone can improve their financial literacy and investment skills. So, as we draw from Warren Buffett's financial journey, the key takeaways are crystal clear. Patience, wisdom, and discipline in investing are paramount. Mr. Buffett's story underscores that financial success requires time, astute decisions, and the tenacity to stay the course. Remember, it's not a sprint, it's a marathon. Warren Buffett's guiding principle is to invest in undervalued businesses with a strong growth potential, a strategy that has delivered remarkable successes. It's not just about the strategy, though, it's about the discipline to stick to it, the patience to wait for your investments to bear fruit, and the wisdom to see the bigger picture. This is the approach that has propelled him to the zenith of the world of finance. As we chart our own financial journeys, let us strive to implement these principles. With the right approach, financial success is not an unreachable dream, but a goal within our grasp. This is not about a quest to get rich quick. It's about building wealth over time, just like Warren Buffett. If this glimpse into Buffett's financial landscape has fueled your ambition, subscribe to our channel for more financial wisdom. Together we'll pave the way to financial triumph.